great to be here today for session 6 of 6 as part of the Xero for Groups, the App Advantage on Simplified Consolidated Reporting. Pleasure to be joined by Harry, Katrina, and Susan, who I will throw to in a second, and they can introduce themselves. I guess in terms of my introduction, my name's Thiel. I'm the APAC commercial lead at Mayday, and very fortunate to be trusted as the host for all of these webinars, which I've really enjoyed. I'm an accountant by trade. I started my career at PwC. I spent some time in local accounting and advisory, very much at the height of Xero's growth, or what felt like the height of Xero's growth. And for the last 6 years, I've been fortunate to work in and around the accounting tech industry, now at Mayday, obviously, and it's a really exciting space with a lot of potential. At Mayday, in particular, we work with larger Xero users. The majority of our customers have in-house finance teams, and our mission is to help them automate month-end. We're beginning with the needs of multi-entity businesses, so hopefully relevant for a lot of the people in the room today. So we're talking about intercompany loan reconciliations, intercompany AR and AP reconciliations, cross-entity bank reconciliations, and intercompany recharges as well. These are all different intercompany challenges, and we're trying to help to automate as much of that as possible so that you can prep your accounts for consolidated reporting. We have over 220 five-star reviews on the Xero App Store. We won Emerging App of the Year last year and are thrilled about the opportunity to be supporting such an amazing customer base. But in talking with that amazing customer base, we've learned a few things. One of them is that there's a big question on a lot of their minds, and potentially on a lot of your minds as well, which is Xero still the right system for me? Can I scale with it? If yes, how long for? Will that be indefinite, or is there going to be a turning point where eventually I'm going to outgrow Xero? The nature of that uncertainty is that it leads us to act earlier than we need to. So that might mean moving from Xero to an ERP when we really didn't have to do that. That's an incredible investment of time, resources, and money. We were quoted the other day on the first webinar of the week, 160 to 200K for the initial implementation. And then that's before we're talking about $5,000 Australian per year fees per user. So, you know, it's getting up there in terms of cost. And so for a lot of businesses, a lot of groups, there's a lot of value in extending the life of Xero as far as possible. So we want to give you the precedent. We want to share as much information as we can about what's been done, what can be done to make Xero work for you as long as possible and avoid that need for an ERP. Yes, it's about righting the misconception that you can't manage groups on Xero, bridging the awareness gap in terms of what's possible with Xero and its ecosystem. But it's equally not about overcorrecting and replacing one myth with another. We don't want you to leave this thinking that Xero is for every business of all sizes and all stages. We know that there's going to be a point for some people, for some businesses, where Xero is not going to be the right platform. So we just want to try and highlight that you can go further with Xero than you might think, but there may still be reasons why at some point that an ERP or other solution is going to be the way to go. So that kind of hopefully sets the scene a little bit. I'm just going to throw up a poll now just to kind of understand who is in the room with us today. So a couple of questions there. Are you currently on Xero, number one, and how many entities are in your group? So if you can just respond to that poll, that would be fantastic. Pretty much everyone on the series so far has already been on Xero, so that's great. Obviously, especially in the APAC region, Xero has done a fantastic job down here. We've got the vast majority of people in, we've got a really good mix actually. We've got a few groups 2 to 5, a few 6 to 10, a few 11 to 30, and a few over 30 as well. So a nice kind of mix. Thanks for responding to that, everybody. I will end that poll now. That helps a lot. So yeah, last thing before I hand over for introductions and we get the conversation going, I just want to say that this series and everything that we do at CFO Tech Stack and Mayday is framed around how can we be useful to our target customer. So that's the reason why I'm not wearing a Mayday t-shirt. This is not product marketing. This is not an ad for Mayday. This is very much just around trying to educate, provide useful content to finance leaders who are on Xero because they're also the people that we work with on a day-to-day basis, and it feels like there's a massive gap for larger Xero businesses in terms of content directed towards you guys. So thanks again for coming, and thanks again to Harry, Katrina, and Susan for joining. I might hand over now to Harry just to do a quick introduction, and then Katrina, and then Susan.
Brilliant. Thanks, Jack. Thanks for the kind of initial intro. Hi, everybody. I'm Harry Symons, and I head up the customer success team at Joiin. We're a UK-based firm, so I'm joining you kind of quite early in the morning for my time, 3 a.m. But kind of all the more happy to be here. And for those of you that don't know, Joiin is a kind of a consolidation add-on for Xero, essentially. Anyone who basically has any kind of group reporting or consolidation reporting needs with their Xero entities is kind of an ideal customer for Joiin, right? You can connect your companies in a couple of minutes, run some really basic off-the-shelf reports, and then kind of get more creative with it, run some really complex kind of granular reports, kind of to meet any kind of statutory requirements, manage all of your multi-currency, intercompany eliminations, all of those things you'd expect as part of that kind of group reporting requirement. But I'm sure we'll kind of get on to some of the more minutiae of that later. So cheers, Jack, and kind of lovely to be here, everyone.
Yeah, thanks for waking up for this, Harry. Appreciate it. Katrina, over to you.
Yeah, hi everyone. I'm Group CFO of a tech company. We're a SaaS platform called Asseti. We have 4 entities in our group and growing as we expand abroad. I do have another client where we have 14, and we use Joiin, and I'll get into that when the session starts. I'm similar to Jack. I started back then Coopers & Lybrand, PwC, followed a traditional trajectory, working for big firms, being Mirvac and Deutsche Office Trust, which we stabled to become Dexus, as you know it today in Australia. But 20 years ago, the last 20 years, my career has been within the entrepreneur startup space. So I have a lot of experience with the pain points, companies who don't, have budget or are starting out. And Xero was a fantastic solution when it came out. And then I've had a lot of experience in how to evolve the finance function as a young company, but growing exponentially. And it's great that, the ecosystem that Xero provides has been fantastic, the growth of all the different apps that are available. So very happy to share my experience. Yeah, thanks for having me.
No worries. Awesome. Thanks, Katrina. And Susan.
Hi everyone, I'm Susan. I'm also an accountant by trade, as I think a lot of us are. I spent over a decade doing tax and advisory for small and medium businesses, mainly in Canberra. And Jack, and I think you and I likely must have started at a pretty similar time, because I think when I sort of started, the record keeping options were really limited. It was sort of a paper ledger that got handed into us, or a shoebox, or if you were like really fancy, maybe like Banklink or MyOb, or like Business Basics MyOb on a USB. But when I came in, it was sort of just when Xero was starting to get off the ground. And I think that actually the whole accounting tech industry was starting to get off the ground. So I spent a lot of time doing the actual tax work and the advisory. But what I really saw during that time was from clients, they had really average like internal systems and processes, and it was making them really inefficient and like long-term costing them revenue from, sales, but also just their cost of running their business, like bigger overheads than they needed, more expensive tax work than they needed. So I sort of left that side, and now I've come across to the bean counters, where our whole goal is to sort of make that accounting function seamless and pain-free for all the internal finance people, and just to make the systems easy and take advantage of all like the great tech that's out there now, and to help people get set up and trained and make sure they've got the best systems they can.
Yeah, brilliant. So I know all of today's discussion will be very relevant to the experience you've had and the clients you've been working with. So thanks, Susan, Katrina, and Harry for joining. I guess in terms of starting the conversation, the first thing I've kind of got on the agenda is pain points, but I want to kind of go even before pain points. It's like, what leads to having a problem? So where do we start when it comes to consolidations? As soon as we're multi-entity, then, this seems to be a relevant conversation to have. I mean, Katrina, maybe from your perspective, firstly, what does version 1.0 of having consolidated accounts look like from your perspective? Happy to kind of get, Susan come in here as well, but what does version 1.0 look like before we have an app like Joiin or any other consolidation tool?
Yeah, that's a good way to start, actually, because as I mentioned, the last 20 years of my career has been in that startup phase, in that very exponential phase of a business. And I think that's what drives the finance function, is the growth of the business. So where I'm working, it was one entity doing very well, providing a service, and through its surplus cash flows, we built the SaaS platform we have today. But then with that comes, we need a entity to hold the IP. We need an entity for the shareholders. So, as a company grows, and it generally grows very quickly, and that's what drives the need, I think. And I came into the business when that growth was organic and so rapid. And there was a bookkeeper doing her best with Xero. And then all of a sudden, her one client, one Xero database turned into sort of 4 overnight, and it quickly grew beyond her capability. And I think that's when the business goes, oh, we now need some help. Of course, everyone's watching budget, because we're growing and we're still wanting to preserve as much cash to build our tech, or build whatever it is we want to grow, whatever we want to invest in the business. So finance, that's a cost center. We don't have any money to pay anyone, or we don't want to. And so, it becomes very much preservation of cash and optimizing, funds to invest in the business that drives that decision. But we do now have 4 entities and a holdco. What do we do? And this is where Xero and what we're talking about today, Joiin, is great, because Xero says, no problem, you can have many entities, as many as you like. And then that doesn't help, though, when board wants, that's great, but we want now a consolidated set of accounts. And in Xero, we're using tracking categories, so that we're used to seeing P&Ls by their tracking categories as well. Oh no, how do we now get a consolidated result by business unit effectively at the gross margin level, and then the usual reporting, the costs down to EBITDA, net profit. And so for me, it's the growth of the business that drives it. The mindset that back office is a cost, and we don't want to spend anything on that. And so Xero with Joiin solves that problem, and I think solves it well, which we'll get into. Yeah. So the first version is we're now growing. We don't want to spend money on the back office. We don't want to hire loads of people. So how can we do this as cost effectively as possible, but also accurately? We still need information. We need information quickly.
I mean, is that your experience too, Susan? I mean, do people find the justification for an app in the early stage, or do they say, like, we need to do this cost effectively, so we're not going to purchase anything else, so we're going to use Excel and we're going to make that work, or we're going to find a way to do this just within Xero, and then maybe that's a nice lead into where you start to run into some problems?
Yeah, absolutely. So I think probably on maybe less startup sort of businesses, and more on just maybe like smaller businesses that have turned into medium businesses, that have actually turned into quite large businesses that might still be privately owned, which is a lot of businesses in Australia. They do usually start just having to put it in Excel, because all of a sudden, they had this one business, and then their accountant says, maybe you should put all your assets in another business, and maybe your payroll should be in another business, and you've set up a new site, maybe that should be in a new company. But then the bank wants to see all of that in one thing, and they put it into an Excel, or more likely, maybe their accountant puts it into an Excel for them, because that's easy. But then their accountant's the only one who can use that spreadsheet. And if anything gets changed in any of the files, you're not going to know about it, because the Excel is, a point in time. So I think longer term, you're always better to start with a consolidation software. And most of the ones on the market, if you only have a handful of companies that you're trying to connect, they're pretty inexpensive, particularly when you consider the cost that you're actually paying to your accountant, or if you have a really good internal finance team, a really good bookkeeper who can do it for you, even if it's your own time that you're doing it for your business, the cost of having just a few on an actual consolidation software is pretty good, really. I think it'll usually end up being significantly cheaper. It also then reduces your human error from buggering up an Excel, Because if your Excel had started as 2 companies that you're consolidating, and now all of a sudden it's this enormous beast of an Excel that has links that flow everywhere and no one knows how to use it except for you, you're in strife. And also, once you sort of get to those bigger stages, you also want to really easily be able to manage all of your eliminations and your intercompany transactions and all those sort of things, and just generally get really good oversight to make sure that your data is spot on all the time and to not have to worry and check back to your Xero file that the data that you've got in your Excel is still correct.
And if I can,
I just think,
oh, sorry.
Yeah,
No,
you're fine. Go ahead.
sorry, Susan, I thought you'd finished. I was going to say, so actually that kind of has really echoed the kind of not the lived experience, but the experience we see with our customers coming to us. It's, I guess Katrina was kind of laying out like the kind of the blueprint of what maybe a forward-thinking firm like Katrina's would do, kind of getting the kind of consolidation piece in early. But actually, what we see is people come to us and say, I can't do it anymore. I simply can't deal with this behemoth spreadsheet that I've created with 45 tabs in it, trying to do VLOOKUPs each week. Oh no, someone's added a new account. What's happening is kind of what we see. And it's kind of people out of exasperation come to us, often not knowing about the Xero ecosystem and coming to us as kind of a first port of call because it's the first thing in their finance function that's broken. And they realize, oh, someone said that there's this ecosystem and it's still really under-adopted even from the kind of people that come to us today, which is really interesting and obviously great growth opportunity for everyone in the ecosystem if it's kind of untapped.
No, absolutely. I mean, I think that's a big part of this series and why we're here is because the vast majority of businesses might have one add-on when, there's easily 4 or 5 that probably most businesses need. And then you may have a situation where another couple are relevant. Sorry, Katrina, were you going to jump in there and add something?
I was just going to add, yeah, I mean, wow, first of all, because, spreadsheets take time to administrate and take, and then you've got version control. And so I'm flabbergasted that companies do try to persevere. And I just wanted to echo in terms of the pricing, because it is, if you think of human time, whether it's the principal, a staff member, or indeed your accountant, and more so if they're external because of the cost, it does become really expensive. But in addition, just reflecting on what we're saying, the CEO, the founder of the business, also wants to know at any day of the week, where's our sales at? If he had to wait for me to update a spreadsheet, to download a CSV file, update spreadsheets and so on, I wouldn't have my job. He wants to know right now, because we're tracking day by day how many calls are made, how many positive connects and so on. So the other great thing about the solution of Joiin and the benefit that we should put there is that you've got that information almost real time. It updates every day or as often as you want it to. You can just also manually initiate the data feed, and you can get your P&L or any reports that you set up virtually, well, basically real time. And that for this business is really important. And I just wanted to put that out there too, that it's not just a month-end tool. It's how are we going across the 4 businesses where we've got 20 salespeople selling, what's the cash like, what's the sales like, and you can get that right away.
I wish I had a poll for everyone who's listening in to find out who is running their consolidations at the moment through Excel. It'd be interesting to understand. And I think like the points everyone's making are very true. I appreciate there's a reality on the other side of, there's still a cost that I have to like put a card down for and pay for something, whereas I can do this for free, and the cost of time is a little more kind of unknown, or it's not as tangible as when you pay for something. But we had a good discussion. I won't go into it in too much detail on, I think, our call on Monday, and Ernest, who was on that, basically said that internally they'd created a policy that's like, nothing's done on a spreadsheet if it has more than 50 rows or something like that. It's just a bit of a random number, but he was basically saying any recurring spreadsheet should be in a software product. If it's an ad hoc calculation that's needed for a one-off situation, great, fine. It's easy, it's flexible. It can basically figure out whatever you need if you know what you're capable of. But then it's that every month coming back in, and to Harry's point, a new account code gets added, and all this time adds up, all these little things. And I think as accountants, sometimes we can think, but that's our job, is to figure that out. And that's how I have value is I know how to do spreadsheets and I know how to build these really complicated things. But in reality, what we're really good at is taking the numbers once they're accurate and looking at them and making business decisions to help move the company in the right direction. So let's focus on adding value there rather than spending time fixing up a spreadsheet. But anyway, we could talk about that for days, so I won't go further down that track. So we started getting into pain points there: human error, the cost of wrong information, inability to delegate it to somebody else, things breaking. Once we've got a solution in place, whether that's Joiin or one of the other consolidation apps, what does that look like? What are we actually getting out of that? What's the setup process? I don't know if anyone feels like they've got their own situation, like Katrina, your own situation. How hard is it to kind of get something like this implemented from your own experience? And then we can kind of go a little bit further down that path.
Yeah, I mean, I tried a few products before landing on Joiin, and there was one particular product I was using Joiin, had another product that came out on the market. It looks so shiny and so much better, and the reports look prettier, the standard reports, I mean. And so, let's try that. And then as you start to get into how to set it up, that's when, and I've gone back to Joiin, Harry, but that's when you realize, Joiin is simple. But just to answer your question around the setup, I don't want to mention the name because I don't want to talk poorly or, be negative, but that product needed you to have the chart of accounts structured. So my first piece of advice would be, those people who do have multiple entities, ideally a chart of accounts are uniform across all of them. Not necessary, but it just makes it easier the bigger you are. But I mean, that would go with your spreadsheets anyhow. So if you've got 45 tab spreadsheet, I guess the only way you can do VLOOKUPs and things is you already have a uniform chart of accounts across your group. But I did not inherit that luxury. I had to align all of my account codes, which became tricky because the tracking categories were different because there were different businesses. But you find a way to make, and you've got the limitation of I've only got 2 tracking categories in Xero, but you've also got project cost codes you can use. So Xero can be utilized to give you more detailed reporting, and then Joiin adds the extra functionality that it can consolidate based on those tracking categories. So just in short, I think my tip would be have your chart of accounts uniform. When you're looking at your tracking categories, try to define them. They don't have to be aligned, but just be aware, where they're different. And then in the setup, the more, when it's uniform, then it becomes very easy to create the report. So the first pain point is when you're implementing the system would be, what's my chart look like and the subcharts? And then you're going to want to look at, okay, some of the apps don't have functionality to bring across tracking categories, project codes, and AR and AP even, because we also report AR, AP on a consolidated basis. Joiin does that. Another reason why we went back to Joiin. And so the shiny, nice other app that we started to look at, because the reports come out with a lovely format and so on, there was a great little cash flow waterfall that we like. But in the end, we went back to what was the easiest to create reports in and all the functionality we needed. So Joiin brings across not just P&L, balance sheet, cash flow reporting, can bring the tracking categories across. And yeah, that would be my few tips. Chart of accounts, know your tracking codes so that they can be defined when you set up reports, easily. And then maybe first take a step back and go, what reports do I want from it? Because as I said, there are other, and who am I reporting to? Is this tool just to make a nice looking reports, or do I want this tool to prepare my full suite of financial reports from management to statutory?
That's brilliant, Katrina. And Harry, I might throw to you now to kind of understand from your perspective what kinds of questions you're asking of people when they come to you to say, hey, we need a consolidation solution. Do you have a list of things that you're trying to understand? Like, do you need to reconcile? Do you need to consolidate AR and AP? Do you need it at an account level or transaction level? Do you need it at X or Y? because I feel like these are the little details within the world of consolidation that you can look at 5 apps, but they all have these little nuanced differences. Some handle some of this stuff really well, and others handle it not so well. But from your experience, what are those considerations?
Yeah. No, really interesting points from Katrina actually. And I'll tell you what, Katrina's stolen a couple of my top tips at the end, but thankfully I've got a few more in the bag, Katrina, so we're all good there. No, so well, it's quite interesting, really. At the risk of kind of going too much into kind of Join's ethos and stuff, our customers come to us, right? They enter the product, and we've designed a product that's so simple that actually they get into the product straight away, and they see the value without us having to kind of give them that qualifying question around what do you want to achieve from it. But I guess it links back to what Katrina was saying around when you're in that buying process. If you're the kind of going to be the finance manager or the kind of the technician that we're using the tool, it's kind of work out actually what you need to achieve. Look across the full Xero market, because there'll be things that Joiin can't do. There'll be things that Sift can do, that Fathom can do across the market, right? And make sure that kind of they tick all your boxes, and then just go and trial them is what we were saying. But yeah, we've kind of Joiin can kind of service people from like kind of small mama and pop stores. So I always use this same example. They're my favorite. They're kind of small, it's kind of a petrol garage with a forecourt shop. In the US, kind of real small mum and pop stores, all the way to your kind of large multinationals with all kind of use cases and complexities in between. And kind of consolidation tools alike can kind of service all those kind of needs, I guess.
Yeah, brilliant. And like Susan, maybe to kind of get your thoughts on this now around the solution and the outcomes that people get from implementing something in the console space. You know, I don't know if you can refer to a client or two that you've recently kind of done this with, but what's the net outcome of getting this kind of problem solved, or these pain points solved?
I think we've kind of touched on a couple of them. I think the first one is taking that responsibility for the console back to the finance team. I think a lot of the time it sort of gets pushed to the owner if it's a smaller business maybe, or to the accountant if it's a bigger business, but your internal finance team maybe doesn't have a handle on it yet. So putting that back into the hands of the finance team, I think, is huge, because products like Joiin and a lot of all the other consolidation options, they're very easy to use. They link into your Xero seamlessly once it's set up. You know, it refreshes every day. You can sync it as many times as you want. And once you're in there, it's just another accounting system. They make it so easy to use that anyone in the internal finance team can use it. And also then the reporting that you can get out of them is perfect, because you can customize it as much as you want. So as an example, when you connect to any of them, you connect into your Xero, and then it pulls in all of your chart of accounts and all of your data. It usually default maps it somewhere, but in pretty much all of them, you can move it wherever you want to create the report that you want or that the bank wants. And in most of them, Joiin does it brilliantly. You can chuck in all of your metrics. You can create your own custom report where you can tell it what formulas you want it to create, what metrics you're tracking, and then it'll just do it for you. It just runs it for you. You just need to refresh, click a button. It's also amazing and really helpful at picking up errors. When you have 30 Xero files, yeah, you know, at the end of month, you want to go through and make sure every balance sheet's rec, and at the end of the year, you want to make sure everything's perfect. And in between those times, it's really helpful to be able to look at consolidated reports or, you know, monthly reports, and just look at them and just cite it and see if everything makes sense. And that's impossible to do when you have 30 Xero files, because often the problems only come out when you sort of look at everything combined. So I just think the ease of it, making everything, just your life so much easier, and that of your finance teams, because there are a few people that I do definitely know that do love doing Excels, like you said, but the majority of people do not. And implementing something like that, like any of these systems, it's amazing, just game changer, I think.
And yeah, that's a really good point, Susan. I like that about empowering the finance team. Sorry, I wanted to really emphasize that, because I'm a CFO who covers HR, you know, ISO certification, like everything else the business needs. It's not sales and marketing or product related. And so I found that I've linked up Joiin, and I'm going to create the reports myself. And as we grow, you know, we're always going to add new codes. And as you do, you've got to put them in which line item in the reports you need. And I was like, oh, I would do it all myself because I was always used to doing that because of the spreadsheets and other things that we're just used to always doing. And it was only this week, actually, I thought, oh, I hadn't given a user access to my finance team, and I did. And, they're all much younger than me too. And it's very intuitive. And they've gone, and I said, look, if I just give you guys where I want what codes and what the reporting line items are for, can you just go ahead and fix the new codes that we've set up and take it from here? And they went, yeah, sure. And we went on, I did it on screen with them a little bit, but they had it turned around in a day. And here it was on my list to do for a couple of weeks. Because, you just got to find that half an hour to sit down, and that's often hard in a growing business. And so I just wanted to echo that, Susan. That's a really, really good point. It's so intuitive and visual that it is, and you can just sort of drop and drag. It is actually really simple for anyone to use in the finance team. Joiin reporting is really easy to use. Yeah.
And so I think that is a nice place to finish from a solutions perspective. We'll get to the Q&A very soon. We've got some questions in here that we can kind of go through and get some answers on in a second. I just want one final question, kind of alluded to it at the beginning, where we don't want to replace one myth with another and act like Xero is going to last every business forever. There's going to be situations where maybe they outgrow it. But within the context of consolidated reporting, do you see any reason why a business can't achieve what they need to achieve through Xero plus Joiin or Xero plus, app? That, is there something, because I think from an ERP perspective, people have this, the rose-colored glasses on that say, look, when it comes to consolidation, when it comes to multi-entity, that's where I have to go. That's where my experience is going to be the best. I don't know if either of you have experience on this side, or Harry too, or if there are reasons why you might need the functionality that you're going to get from an ERP that, Xero plus Joiin or something like that won't provide. I don't know if we can, Katrina, I don't know if you've been there, Susan, I'm not sure either.
Yeah, for me, and I have done everything from a Microsoft Dynamics back in the day, way back when, Timberline implementation, Microsoft Dynamics, NetSuite, and reflecting back on, and then since then Xero's come into the space, and then just looking back, I honestly think when it comes specifically to reporting, consolidation reporting, there is not one ERP that I know of today that I've had experience with that we can go, oh, it produces all the reports exactly what we need, and there's no other solution off the side to create the reporting required. Granted, it's been maybe 5 years since I've used an ERP, 5 or 6 years, but when it comes to reporting specifically, there is nothing. There's always something you have to do off the side because, first of all, standards are always changing, businesses are growing. There's not one ERP that's loaded every IFRS requirement and magically creates a fully compliant set of reports that I've come across. And so that's my response on the reporting specific side. When it comes to, okay, Xero versus ERP, can Xero last a business forever? What I find, I guess the answer has to logically be no, of course not, because why would we have ERPs then, or they would be going out of business? What drives it for me in my experience with growing businesses is more the functionality that's business specific. As a general ledger, I think Xero is pretty good. General ledgers are pretty simple machines. We've got a double entry account, but as long as it's doing what it needs to do, recording transactions, what drives the need is more the business requirement. So ERP is needed, for example, if you're a Woolworths and you've got to send direct transactions to suppliers globally, and so therefore you're going to need to link into connections. So when it comes to scale and your connectivity with other people in your supply chain, I think that drives the ERP question. One of the things that drives it. Another is just functionality, and the ERPs don't always solve it. So an example is we're a SaaS business, and we were at a decision point. We need a subscription management tool. Do we find a tool that plugs into Xero, or do we go NetSuite? Because I was a bit biased towards it from having used it as my last ERP. And then actually when we drilled into what we needed, NetSuite actually doesn't solve that problem. And so we've plugged in, a subscription management tool into Xero, because, an ERP hasn't got all the things that we needed right now for that. So I think a business needs drives the decision as well as to how long Xero can last you.
Yep.
And that's why Xero is so fabulous, because if you look in an ecosystem, there are so many tools, and sometimes it's a bit overwhelming, but there are tools that can get you to a certain point. So I certainly think from a startup, small, medium business, Xero can last. I know someone who's got a 12 entity, 100 million turnover group still in Xero and not having a single issue. It's a very simple business.
Yeah.
So yeah, I think it's business need and functionality that drives that, rather than rev turnover, number of entities that drives it.
Yeah. Look, we do have some questions that we'll run through very rapidly in a sec. Susan, just anything you wanted to add to that before I go to the Q&A?
No, I really agree with what Katrina was saying. I think the main thing is that it definitely isn't the business that needs to go onto an ERP. Xero is great. There are soft limits on it, but there's so many apps that you can plug in that help you even manage those sort of soft limits. So just treat Xero as sort of your base, and then you can customize it as much as you want. It's generally a lot more flexible than a lot of the bigger systems anyway. And like you said earlier, significantly cheaper.
Yeah, that's right. Okay, cool. All right. Well, last but not least, let's throw to the Q&A, and we've got some great questions in here, Harry. I think a lot of them are going to be for you. So let's start at the top. We're not going to share screens today, but if there's interest, I'm going to chuck a poll up at the end anyway to see who would like to catch up with Harry or the Joiin team. Likewise, if you want to learn more about Mayday, so demos and stuff like that, separate to the discussions we're having. This is very much just around sharing stories, experiences, insights from people who have been there and done it before. But I guess, are there any online demo links you can share, any comparison tables of features, things like that? I think we've got a couple of questions in here, Harry, around how does Joiin compare to Fathom, other apps, that kind of thing.
Yeah, so I can see there's a couple from various kind of anonymous attendees, isn't there? And there, yeah. So on all of our resources and kind of are available to kind of people prior to signing up. Okay, so we're happy to run you through a demo. There's online demos that you can watch. No sign up or anything needed. We haven't got any kind of direct feature comparisons. That's kind of not really. We don't want to necessarily compare ourselves to us, but we're happy to talk about it, right? Our USP within the consolidation market is around ease of use and cost as well. So I think we're about until you get to about the kind of 10 entity mark, we're about a quarter of the price of our direct competitors in terms of who are as feature rich as us. That's basically, long story short, simple product. We don't have a sales team, so we don't need to pay a sales team, so we've got lower costs. Is the short of that one. But happy to chat, compare. We can be honest as well where we don't compare as well to your, for instance, SIFT reports are beautiful, right? Ours are decent looking. They're not SIFs. That's where we kind of sit there. That was kind of relating to one of the questions there.
Yeah, no, perfect. There was also one on fixed asset registers. So does Joiin consolidate fixed asset registers?
So I saw that one, didn't I? That came in from Claire. Claire, if it's okay, I've got your email anyway from this call. Let's chat about that one and requirements and stuff offline, if that's okay. Just because we might need to go into a little bit more detail than we've got in the final 3 minutes, if that's all right.
No stress. Now, there's one here around, could you please explain if Mayday and Joiin are complementary tools? I mean, I can speak to Mayday, but I'd love, like Susan, I know you work with a bunch of businesses, Katrina too. So, I mean, can you kind of explain how you see the differentiation? Because they are complementary tools. We don't do consolidations, and Joiin doesn't do kind of intercompany recharges and transactions. So yeah, how do you see them working together? Susan, go for it.
Speak to it if you like.
Yeah.
I definitely think they are. They do definitely do different things, and both of them are amazing. So Joiin, like if you were doing your consolidation and all of your loans don't eliminate, you've probably got a loan that's out of balance. It's a bit of a pain in the neck to find it. The Mayday system of being able to produce just a beautiful matrix just by connecting in your zeros, it'll create a loan matrix for you. And then you'll be able to click in, you can see what's causing your out of balances, and then you can click, it'll take you straight to Xero, you can fix it. It's amazingly easy. And then also in Mayday, the recharger function that exists for multi-entity businesses is like nothing I've ever used before. You just set rules, like you would set a bank rule in Xero, and then you tell it what to do. You say, I want to find all of my Microsoft 365 payments that are coming out of this entity every month. And then when you see that, I want you to create an invoice that splits it between these 6 entities. And I want to split it based on my headcount. And you can update your headcount in a separate section. It'll produce it for you, and it'll post it for you. So I think Mayday on that side, it being able to just help your back end, again, it just reduces human error. Like you find things so easily, and then you can just do it. It'll do it for you effectively. It's phenomenal. And then Joiin, they are definitely complementary. They do very different things. And I think bigger multi-entity businesses will have huge advantage from utilising both.
I think harking back to XeroCon London, Jack, I overheard you when I don't think Jack knew I was there, and he described Mayday and Joiin as the perfect multi-entity team or something, and that was completely unprompted by us as well. So it's
that's fair.
Yeah,
yeah.
maybe a bit
totally
corporate,
different
but I
things.
love it.
One tip though, guys, with Mayday, it's a 1-for-1 link. So the matrix that Susan said Mayday creates, and I had this with another client, it's one geo loan account to another geo loan account. If you've got 2 that make up, and I know it sounds ludicrous, but it did happen in a client of mine. You've got 2 loan accounts or more in one entity being coded into just one in the other. So just set them up separately and link 1-for-1. But yeah, they do totally 2 different things. Joiin is reporting, and Mayday is more around the intercompany balancing and journaling.
Well explained. And I'll take that.
And by
as
the
a good
way,
opportunity.
sorry, one last thing on Mayday. And it is not a fault of Mayday, but I just want to manage expectations of people out there who think it's going to solve everything. One thing it can't do yet, and it's not a Mayday architecture issue, it's the banking system. It can't, when you've got like a transfer out of money from one entity into another entity's bank account, it can't do that. And it's got nothing, I understand, Jack, it's got nothing to do with software or coding. It's actually the banking system and how Xero gets that information, or Mayday does, that it can't do that. But then you set those bank rules up, and thanks, Susan, for mentioning that. You set those bank rules up in Xero, so that gets you around that.
Yeah, and you're talking about the bank rec across the group feature there, Katrina. So basically that's where you're paying for stuff on behalf of one of your entities out of another entity's bank account, and we can automatically match that payment up to a bill or an invoice sitting in another organization. But when it's a transfer, there's reasons why. I'm happy to kind of chat through that with anyone if you jump into a demo or we go down that route, generally speaking.
But that payment function is a game changer for me. I have one client that has one bank account across 13 entities, and Mayday is fantastic, can deal with that straight up.
Cool. Well, appreciate it, guys. In terms of remaining questions, hopefully that's helped answer that one. Sorry, are there any limits?
About sorry, go.
You go. You're right.
No, that question about can you create other reports other than P&L, balance sheet, cash flow? Yes. The direct method, I think, is a conundrum for every finance tech company on the planet. But it can do, budget. And then, as Susan said, you can create cells and rows with your own formulas and put non-financial data in there as well.
Brilliant. This is going to require some modesty, Harry, but are there any limitations that Joiin has that we need to be aware of?
Do you know what? I was having a think, actually. So that's Trish's question, isn't it, that came in? So kind of if I was thinking limitations, one of them actually harking back to the question that's just asked around direct cash flow. So Joiin has an indirect cash flow as standard off the shelf. You can get a bit creative and create a a bit of a kind of Frankenstein direct cash flow in Joiin, but at this moment in time, direct cash flow is the one thing really that we don't do at this moment in time. We've been in the market like 5 years now, so we're kind of a pretty mature product. There were loads of issues with it previously, which we've kind of built in and fixed. So that question kind of gets a little bit more hard.
Yeah, no, that's good. That's good.
I mean, I was at a lunch with Sage, invited by Sage, actually Fuji, employment hero Fuji, but even Sage says they don't have a direct method cash flow consolidated reporting functionality. So I don't think it's only Joiin there, Harry. I think it's the entire planet is still trying to solve.
No, it's quite the conundrum. Whenever it gets mentioned in our kind of product meetings, everyone kind of scowls and looks angry. Yeah.
Cool. I think we're nearly there. Final question Trish has on here. Any links to see the demo? That might have been posted before we threw up the poll. So I've got a poll up right now. Basically, I think everyone's responded. So Harry, I'll let you know who's kind of asked for a demo of Joiin, and there's a few there who want a demo of Mayday as well. So we'll be in touch on that front to book something in. Of course, you've got access to our websites as well, and there's probably book a demo links on both of them if you just want to jump on it now and find a time, and we'll look forward to catching up. But let's leave it there. Thank you, Susan, Katrina, Harry. Great to catch up. Great to chat. Thanks to everybody who's tuned in throughout the series. This is the last one, so it's going to be sad to finish it up, but it's been a really good conversation, and it certainly won't be the last conversation we have around Xero for Groups, the Xero app ecosystem. Definitely check out CFO Tech Stack for ongoing content, events, and everything else. If you're over in the UK in early September, we've got Stacked running as well. I'm not expecting anyone to be over in London, but September 12th, the first Stacked event is happening. So keep an eye on that. But yeah, thanks everybody. Really appreciate your time.
Thank you.
Thank you. Bye.
No worries. Cheers.
See ya.
This one, thanks.